Welcome back to the channel, everyone. Today I want to talk about how Citadel is desperately creating liquidity and taking loans in order to stay afloat. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So firstly, I want to talk about the largest pension fund in the entire world, Mizuho, reassessing and stopping its stock lending program. Stock lending obviously aids the creation of synthetic shares and naked shorts because obviously shares are lent by these big hedge funds for other funds to short. Obviously, if a market maker can't locate shares to be shorted, they can theoretically still short shares to other hedge funds, providing that some funds own a very large portion of shares, as they can effectively class it all within the same pool. Obviously, if retail investors own every single share and decide not to lend out their stock, then market makers shouldn't really be lending out shares in order to short because they won't be able to locate them because we hold all of them. But obviously, as this isn't the case, yes, we own 80 or 90% of the float and potentially the whole float many times over. Obviously, some large funds like BlackRock and Vanguard do hold some shares, and therefore the hedges can continue to short and the market makers can continue to create synthetic shares for the meantime. Some of the guys in the Patreon and the private Discord asked how the hedges are still able to lower the price of AMC and ladder attack AMC, regardless of the Department of Justice investigation and all of these new transparency rules. And the answer is because obviously these market makers and these hedges can still borrow shares from BlackRock and Vanguard, or the market makers can still create shares if they can't locate them because they know that BlackRock and Vanguard are holding a large portion of shares. And the reason why they're still doing it, even though they're on the brink of the Department of Justice investigation, is because if somebody is doing something illegal, they tend not to stop it, even if they're being investigated. You may remember the scene from The Wolf of Wall Street where Jordan Belfort has the guys from the SEC in his office and he sticks them in a really small and really cold room. And he says while they're looking for a smoking gun in that cold room, here he is letting off a bazooka in the bigger office. And therefore, even though these hedge funds are being investigated by the Department of Justice, the FBI and the SEC, they're still going to continue committing their illegal crimes because they're hoping that the SEC, the DOJ and the FBI don't find anything wrong. Obviously, the DOJ is looking for evidence of spoofing and of scalping, while these hedge funds are committing much more serious offences like market manipulation and the creation of synthetic shorts. But obviously, as the world's largest pension fund is stopping their stock lending program, it wouldn't surprise me if some other large pension funds or some other institutions like BlackRock and Vanguard also stop lending their shares as well. But first, let's listen as to why the world's largest pension fund is reassessing its stock lending program.
Absolutely, yeah. It was a monumental decision, really, in some ways, and it started the debate on the merits of short selling. Obviously, the GPF is not themselves directly involved in it, but it really kind of rekindled a debate at the time over the merits of short selling and the merits and demerits of that practice. Mizuho himself has had quite a lot to say when he was the chief investment officer about short selling, and subsequently he's now on the board of Tesla.
So clearly even some of the world's largest pension funds and maybe even world's largest hedge funds are realising just how unethical short selling is as a practice, and therefore they're halting their stock lending programs. Now I also want to talk about the world's largest US pension fund quadrupling its position in AMC. Guys, if you're getting a little bit worried leaving your AMC in Fidelity or in E-Trade due to all the recent glitches and the fact that Fidelity actually supports short sellers, Moomoo are currently buying you a free share of AMC on top of their usual 5 free shares when you sign up to Moomoo using the link in the description below and make your first deposit. When you sign up to Moomoo and make your first deposit, you get 2 free shares valued up to $3,500 each. If you can deposit $100, you also get this free share of AMC bought specifically for you. And guys, if you can deposit the full $2,000, then you also get an extra 3 free shares valued up to $3,500 each. The official Moomoo US YouTube channel has just posted a video saying that Futu does not accept payment for order flow, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. Moomoo also has excellent technical indicators and advanced charting tools. Moomoo also publishes daily short selling data, position cost distribution, and a number of other key indicators. So guys, be sure to sign up to Moomoo using the link in the description below to get up to $17,500 in free stocks and a free share of AMC. Peter Han says, once again, I have to raise the question. If AMC was overvalued, why did CalPERS quadruple its investment in AMC in Q4 when the stock was trading in the $35 to $45 range? But not only that, between Q3 and Q4, AMC also fell from the $50 range all the way down to that $35 range, and therefore this pension fund has already lost out massively on its Q3 and Q4 investments due to the price of AMC falling. Obviously the US's largest pension fund wouldn't be doing this if they didn't see AMC running up again. Peter said, and similarly, they also added 70,000 GameStop shares in Q4 to the 15,000 that they already owned. And he said the mainstream narrative is so laughable at this point, I do look forward to see what the Department of Justice decides to do in regards to short sellers and their roles in influencing financial media publications. He said the DOJ has been noted that they are considering using RICO charges in their investigations, so it should be an interesting period going forward. But now let's also talk about some further evidence that Citadel is in trouble. Public filings show that Citadel has received financing from the Bank of New York Mellon and Mizuho Securities in the last 6 months. And this also mirrors what they did during the 2008 financial crisis. Obviously, Citadel shorts are so over-leveraged, and their long plays on the wider market are also so over-leveraged that they need financing to stay afloat. The poster says, I was reviewing another type of public document, UCC filings, and came across something interesting. UCC stands for the Uniform Commercial Code, and there are standard forms that get filed with each state. One of those forms, UCC-1, establishes you as a secured party. This means in the event that a debtor goes bankrupt, you have a place in line, so to speak, when the court divides that debtor's assets among its creditors. If you are a secured creditor, you stand towards the front of the line, likely behind any government entity such as the IRS, and obviously ahead of the underlying shareholders such as Ken Griffin himself. This means your chances of recovering all or at least some portion of your money or assets are much, much higher. Searching New York's UCC filings database for Citadel, I found that several Citadel funds had financing statements filed by creditors in the 2008 to 2009 timeframe. Back in 2008, 2009 and 2007, there was a number of different institutions that lent money directly to Citadel. Those institutions were Nomura, Credit Suisse and also Deutsche Bank. Now there's also some new filings from the 12th of August and the 23rd of December that show that Citadel has borrowed money from the Bank of New York Mellon and from Mizuho as well. This is now 2 large banks that are now secure creditors of Citadel due to lending money directly to Citadel's funds. And he says this clearly shows that some kind of financing has been extended to Citadel's global fixed income funds by the Bank of New York Mellon and Mizuho Securities in the last 6 months. And he said this, combined with the recent restrictions around investor redemptions, shows that Citadel and Ken Griffin directly are under a lot of financial pressure and are desperate for liquidity and for external financing. This quite literally shows that Citadel is hanging on by the skin of its teeth, just on that edge of liquidation. Now there's one billionaire value investor that's just issued a cataclysmic market warning as the price of Bitcoin and many other assets have been crashing over the last few months. Obviously Bitcoin, Ethereum and other cryptocurrencies have crashed in the last few months, but also so have many growth stocks and tech stocks like PayPal, Facebook and many others. Now this billionaire value investor says that these crashes are effectively dragging down the liquidity or the available margin at many funds, and he said that some funds are going to get badly hurt in the coming cataclysmic market shift. And he said we really did hit peak stupid, but peak stupid extended beyond truly stupid, and then we went to the bottom of the ocean, rare earth metal companies kind of stupid. He said big stock market winners during the pandemic era lockdowns, such as Coinbase, Peloton, Zoom and PayPal, have dropped sharply from their recent highs, with the likes of Meta or Facebook and Tesla also falling hard as investors get to grips with the return to normality. Now this return to normality is obviously dragging down the available margin for basically all funds across the market and bringing more and more funds closer and closer to liquidation. Now, obviously, this falling market or this cataclysmic market shift could end up causing a squeeze if funds like Citadel or Melvin Capital end up being liquidated as a result of the falling market. Now, finally for today, the Street published a very interesting article saying what the trading irregularities probe means for AMC stock. They said last week the US Justice Department launched an investigation into potential trading irregularities conducted by banks and hedge funds. This renewed hope among AMC shareholders that they'll be vindicated for what they've been claiming all along. Obviously, the article talks about the Department of Justice short sellers investigation, but I've covered that on my channel over the last few days. But it does say the official announcement that the authorities are keeping an eye on the alleged trading irregularities may show that the claims of AMC shareholders are indeed credible. And it says until the irregularities that have affected AMC's performance have been corrected by the authorities, the stock should continue to trade primarily according to the sentiment of its stockholders. This may even be more positive as the investigation progresses. Basically saying that for the moment, AMC is likely to still be manipulated until the Department of Justice make their accusations and make their arrests. I think this is very interesting and very coincidental how mainstream media is now jumping aboard the AMC ship and saying that the Department of Justice is going to sort out the market. They're also saying that when the Department of Justice does sort out the market, the AMC is likely to squeeze. It seems that after months and months of posting FUD, the mainstream media all of a sudden seems to be turning to our side. This is obviously just a way of making the mainstream media look like they were the good guys all along when AMC does eventually squeeze. But obviously you and I know that is absolutely not the case, as they've been posting FUD for months now. Guys, be sure to let me know down in the comments below what you think about Citadel desperately creating liquidity and being desperate for external financing. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.